beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
We're seeing Hang Seng that's down 0.8% as well, and Nikkei, that was managing to outperform today, that's down 0.8% as well.
Increases in tariffs this year are likely to push up prices.
And resistance stands at the recent high, which is 24,982, 24,800 on the Nifty, 55,700, 55,830 on the Nifty Bank.
Whatever hopes there was of extra benefit to India on the fiscal side through lower oil prices, that's completely gone away.
Largest listed pure play power T&D equipment player, followed by Hitachi Energy as well as GE Vernova T&D.
Started off well, we recovered from the lows, and yet again it's a familiar story that's playing out.
Nifty is trading with a minor cut of 0.1%, but it is the mid-cap index that is bearing the brunt of the market's wrath.
Hello and welcome. It's the last trading hour of the day. This is Closing Bell. We're coming to you as always from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me as always Nigel D'Souza. And what we have is a very skewed market. And today it's the reverse. The headline level index is actually fine. It's actually doing better than a lot of the other markets. Asia, for instance, was down. European markets are trading negative. But it's the mid caps, which is where the problem and the pain seems to be appearing. So, Nigel, it seems that now finally people want to lighten up a little bit. I mean, it's been a good April rally and maybe there's just some profit taking that we're witnessing.
Well, that's right. Surabhi, actually participation has been rather low. And if you look at it, at the start of this week, actually we had one good trading session, but it came on very low volumes, telling you that participation is low. And now the broader markets, basically, that's telling you the real pain out there because the broader markets are a little bit skittish. So the domestic money is not coming to play. They're waiting for de-escalation on the global front. They're hoping that, in fact, we get a couple of positive cues as well. So it's an interesting phase, a bit of a tricky phase as well, particularly from the broader markets, because the last 2 months you've seen big returns. And as you said, Surabhi, the frontline headline index Nifty is unmoved. We have the weekly expiry that will play out later today. But the pain in the broader markets, that's being masked by what you're seeing on the headline index. But otherwise, breadth of the market as well. 5 stocks declining for just 1 stock that's advancing.
No, absolutely. And just an update on the global front as well. Risk off is the general sense of the day. That's the advanced decline ratio. Let's throw up some global markets for reference for you, because most of the Asian markets, for instance, if you're looking at Hong Kong, Japan, most of those markets ended lower. For instance, the Hang Seng was down 2% today. So compared to that, the Nifty is unmoved. But we are dealing with the mid-cap pain, which we'll come to in just a bit. If you look at what European markets are doing now, again, there is a sense of caution out there. Most markets are down between, I can see 0.5% or so. Some of the markets, the French market, for instance, it's down about 0.75%. So the world is watching the Middle East with a lot of caution. That's point number one. Today, the Swiss central bank, the SNB, it cut its interest rates to 0. It was on unexpected lines, but generally, big headline that played out in terms of global central bank action as well. Now let's come to our market and talk about this mid-cap pain. Just some examples where there is very clear profit taking today. Some examples: Cyient, Minda Corp. These are some of the. MobiKwik was down 10% yesterday. It's down another 6% today. So all kinds of stocks, and across the spectrum, they are seeing a little bit of pain as we look at the overall situation. So that's how it's playing out. We'll discuss this as we go forward. We'll discuss the interesting new listing today. Listing in the sense I'm talking about Siemens Energy, which is the energy business of Siemens, large T&D business over there. That stock is at this point, it's lower by 5%. So we'll talk about that as we go forward as well. Let's get started then. As always, we have Mitesh joining in with a quick trading construct. Mitesh, good afternoon. What do you make of it? Nifty unmoved, mid-cap market flashing red.
I think the indices, Surabhi, good afternoon. I've been maintaining that we'll see more and more contraction because most of the volatility indicators are suggesting a very flat kind of a reading there. Therefore, I think a directional bias, maybe after a few days, once we get a jump on either side, we'll figure out which way the directional bias will shape up. But for the time being, it looks like that, we are in for this contracting market for the next few days. On the stock side, Wipro is something, which has caught my eye. Flat kind of market, it's doing slightly better, and the chart setup is also good. So buy here with the stop at about 260 to 261.5 and look for a target of 275 to about 28. While on the negative side is Balakrishna Industries. That's a stop which is slightly turning weak, and I would suggest a sell with the stop at about 24.35 for targets of 23.30.
All right, Mitesh, I wanted to ask you about Reliance Industries because, if I look at a one-year chart of Reliance Industries and the Nifty, you'll say that for a longish bit, actually, it underperformed. But take a look at the outperformance you've seen in the last 2 to 3 months. Brilliant move is what we're seeing on Reliance Industries. And that's an index by itself. Just take a look at that. That catch-up play that we've seen, it's still underperformed in the last 1 year. But in the recent past, it's played a super rock-solid role. What's your view? Where is this headed from around this 1440-odd mark?
So, Reliance is a very interesting chart in the short term. See, it was underperforming, as you rightly said. Then, it did some good base building around and just below the levels of 1200 and then reversed. And then in the last, starting from, somewhere in April, we saw the stock rally to about 1450, 1416. The weekly chart is still good. But like the index, the short-term chart, the hourly, 2 hourly charts have all turned sideways. A breakout will happen above 1460, 1465. In fact, if Reliance breaks out, I'll have some hope of Nifty breaking on the upside as well. So I think the stock will eventually break on the upside. But, it's just from that move which has happened from 1200 to about 1450. I think we are seeing base building consolidation at a higher level, which is not bad, but it might take a few more days.
Got it. Okay. All right. Thanks a lot, Mitesh, for joining in and giving us that view. Let's turn our attention to the IT space, though. And there's a raging debate out there whether or not it's going to trend up or down. So Hormuz joins in to present to us a bull versus bear case. Hormuz, take it away.
Well, divergent opinions coming in from both Morgan Stanley and CLSA on the Indian IT sector. And I'll start off with the not so good opinion or the not so optimistic one that comes in from Morgan Stanley, where they are saying that although they are seeing some recovery in demand trends or in the orders, but their thesis of 2 years of muted earnings CAGR remains intact. And that is because there are still signs of weak discretionary demand and the fact that there is still an opportunity for vendor consolidation, and hence they have advised investors to use any pullback in the IT stocks to trim their positions within these companies. Now, within the large cap space, they are only overweight on one name, that is TCS, and the others being Infosys, Wipro and LTIMindtree, where they are equal weight. On the mid cap space, they are only overweight on Coforge and they are underweight on names like Cyient and on Tata Elxsi. Now, on the flip side, CLSA has come out with a slightly optimistic tone here, where they are saying that there is likely to see some good commentary coming in from the IT names in terms of the deal pipeline this time around, and that is because all Infosys, TCS, Wipro have received significantly large orders in the recent past. They have highlighted Infosys and Wipro in particular as to why their stocks could see upside. They mentioned for Infosys that the deal closures that they've announced of the acquisitions that they have made recently, that could lead to an uptick in their FY26 revenue growth guidance, which currently stands at 0 to 3%. And for Wipro, they've mentioned that in case the company announces a share buyback along with their earnings, that could provide a fillip to the stock price as well. The last time Wipro had carried out a share buyback, of course, was back in 2023. So they are, of course, eligible to announce one this time around. Now, within the recommendations, of course, they are optimistic on most of the names. Persistent Systems is where their high conviction outperform lies, as does Tech Mahindra in the large cap space as well. And Persistent and TCS are some of those names where they have the highest potential upside. Whereas for one stock in the recommendations list, that is LTIMindtree, they have a hold rating and a potential downside there. So divergent opinions coming in. CLSA is optimistic, Morgan Stanley not so.
Okay, all right, Hormuz, thanks a lot for joining in and giving us that view. Dipan Mehta, Elixir Equities, joins us on the show. Dipan, if I look at it in the last 3 years, you have been in both the sides. Bearish earlier, then you turned bullish, I think so. At current reckoning, where are you placed? Which side of the fence?
Confused.
I hope you're not sitting on the fence.
Confused.
You like something though?
No, Nigel, confused at this point of time.
But if you have to buy one of those stocks from the IT pack, which one would it be?
None of the large cap IT.
Mid cap then?
Mid cap now, Persistent is there, but it is so expensive. I like new gen tech also, but that also I think results are a bit disappointing. We need to go down the line, like recently I saw an interview on your show only of this Orion Pro. And that is looking quite interesting. It's a kind of a product company and offers a lot of platform services to the banking and financial services sector. A large amount of revenues coming from domestic and not so much from USA as well. So I think there may be a few such nuggets within the IT space, but by and large, I think we should be nil as far as software services companies are concerned. I don't agree with any of the positive reports which have come. I think that they are in a structural decline in terms of their growth rates. And their main competitors, their main clients have become their competitors by setting up GCCs in India. So I'm bearish on the sector as a whole. Maybe odd company like a product company like Oracle looks interesting, but a lot of volatility in their earnings over there as well. So by and large, the sector going to avoid.
Yeah, and what about Orient Pro? They had, I think, analysts meet a couple of weeks ago, and they've been guiding Mr. Rai. When he joins on the channel, he guides for around 30% growth. So do you think it's interestingly placed? Would you dip in?
Maybe at slightly lower valuations, and I think we are seeing a correction in mid-cap stocks. So maybe if it's available 15-20%, maybe 10% cheaper also, it may make sense. But other than that, I don't really. There's another small company called Sciences. I hope I got the name right. It's a CEIN Sciences. That's quite an interesting company, which we also studied. You could look at that as well. But really, there are hardly any good stock ideas when it comes to the software services pack.
Okay, so not entirely convinced, only looking at very, very few specific niche names. Got that, Deepan. We want to talk to you about the power space because there's an interesting development there, and I'm talking about Siemens. So let's get in Vamakshi actually to understand what's happened. Remember, Siemens went through a business demerger, and their energy vertical has now separated. It's now a separate listed entity as well, and I'm talking about Siemens Energy. The first part of this demerger happened on the 7th of April, and now this energy business finally has started trading from today. Its other comparables are on your screen as well. Hitachi Energy, GE Vernova, TND, and some of these stocks, given the opportunity there, they've done really well in the market. Let's go to Vamakshi and understand the lowdown on Siemens Energy. Vamakshi.
Well, Surabhi, it was a good listing as far as Siemens Energy was concerned, but of course the stock has seen quite a bit of a cool-off from the day's highest point. But nevertheless, the company is the largest listed pure-play power T&D equipment player, and it is being followed by Hitachi Energy as well as GE Vernova T&D. As far as SY24 is concerned, revenues stood at 6,345 crores with an EBITDA margin of 15.6%, and brokerages are expecting the company to post very strong growth going forward. In fact, Jefferies is expecting a revenue CAGR of almost 36%, PAT CAGR of 49%, accompanied with an EBITDA margin of 19.5% by SY27. Motilal Oswal too expects a robust revenue CAGR of almost 25%, PAT CAGR of 31%, and an EBITDA margin of 21.4%. Largely, they expect growth to be driven by sustained private as well as public sector capex. They also see growth from emerging segments like data centers and multiple HVDC tenders in India as well, which offer an average opportunity of almost 10,000 crores per project. As far as valuations are concerned, if we compare the price to earnings multiple, basis the listing price today and the SY27 EPS estimates, for the P for Siemens Energy stands at 51 times, which is much lower as compared to Hitachi Energy as well as GE Vernova. Now, basis this, brokerages have their own recommendations. Jefferies has a target price of 3,700, while Motilal Oswal has a target price of 3,000. But apart from this, we have to also keep an eye out on an important factor, that is the MSCI dilution. It will be removed from the MSCI Global Standard Index with effect from tomorrow. And, Nuvama Alternate and Quant Research is expecting an outflow of almost $170 to $180 million. So that is an important factor that we'll be watching out for. And we'll also keep an eye out on what plays out in the FTSE index as well. So that will be another important factor to keep an eye out for.
Excellent as always, Vamakshi. Thanks a lot for joining in and giving us that quick update. Well, on that note, though, let's hear out what Mr. Amit Anwani had to say with regard to Siemens Energy. He joined us earlier today on the show.
The pipeline is robust, and we don't know which form and what quantum and which orders can come. So, for example, the NTC has already cleared 2-3 orders, which could be worth more than 30,000-40,000 crores. But we have to see whether it will be LCC or VSC, since Siemens Energy has already highlighted in the past that they will not go for LCC. So I think that will significantly improve the prospects, but currently I'm factoring in 27% PAT growth. So I think we can assume that maybe 25-30% could be the win rate. But then in the past, we saw Hitachi also doing jointly with BHEL. We have to see in which form Siemens is going to do, whether it is standalone or with someone, and the quantum of the orders which they can get.
Okay, that was a view from PL that came in earlier in the day. Dipan, what do you think? I mean, this whole HVDC buzz, it really electrified some of these stocks, right? Stocks like Hitachi Energy. What do you make of the whole space, including this new entity, this separate Siemens Energy business that is now listed and is available for investment?
So be very positive on these power distribution equipment companies and Siemens Energy in particular as well. And companies like Siemens, Hitachi, and GE Vernova, they are really at the top end. Their products are quite high tech, limited competition. Earlier threat was there from Chinese, but that's no longer such a big threat. And in India, what is happening is that the grids are becoming smarter, more intelligent. So I think demand for these sophisticated products will only go up. So very positive on Siemens Energy, seriously considering it from an investment perspective. But also like these transmission companies, especially Kalpataru Power, sitting on very good order position, around 65,000 crores or so. Good 3 years earnings visibility is also there over there. And there is the smart metering company also, which we're very positive on. So this entire space is looking very great. And with the urbanization taking place, growth of EVs and data centers, I think distribution infrastructure has to be significantly improved and invested in. So very positive on all of these companies, and certainly Siemens Energy also has a good listing and looking at it quite positively.
Smart meter company, which one was that?
Oh, I forgot the name. There's only
Genus
one company. Genus Power. Yeah, that's right. That's right. It's got, I think, some 30,000 crores order. I don't know how much is executable at what point of time. But last I checked, it has earning visibility of almost 8 to 10 years or so. And performance has been best in class. Just maybe, from a corporate governance point of view, there could be a risk factor, if at all.
Yeah, that's what. And I think there was a large trade that was expected from one of the investors a week or so ago that got cancelled as well. There's only one problem with this, Dipan. As you said, a good order book, good execution, good niche space. But the receivable days, I think, are high. Though I was listening to the con call and they said that the receivable days are likely to come down in this year itself, because they've got that SPV as well. So we'll have to keep an eye out on that front. Besides that, let's talk about, it's a day of frontline names. So let's talk about Bajaj Finance. What's your view on the stock? It's lower today, but I think that bonus shares, there was a corporate action. Bonus shares got credited yesterday. So I think that's why, in fact, there is some supply as well in the near term. Your view on it, it's down 2.5%.
I think, first of all, it's a company which is part of our core holdings. So our views could be to an extent biased, but generally positive on the long-term process of Bajaj Finance. With the cut in interest rate, NBFCs will benefit even further. Threat from Jio Finance, which was real about a year and 2 years ago, is not so much at this point of time. Only thing is that last 2-3 quarters, I thought that the NPA provisioning would move in line with the pre-provisioning profits, but that has not happened even in the March quarter. At some point of time, I think the pre-provisioning profits and the growth in NPAs provisioning will align, and that could mean a big alpha for the bottom line. But look, the base also is getting bigger for Bajaj Finance, so it's going to get more and more tough. So generally positive on Bajaj Finance, but it's not going to be a multi-bagger the way it has been for the last 10-15 years or so. But nonetheless, I think it can easily outperform the Nifty and the Sensex. One of the few companies which can give like a kind of a double-digit, high teens type of earnings growth over the next few years or so.
Okay, all right, got that, Dipan. Thanks a lot, Dipan, for joining in and having that chat with us. Wishing you a good rest of the evening. Hopefully it doesn't rain too much. And we look forward to chatting up with you.
Thank you.
This one. Well, a quick check on the markets before we get into that break. Nestle India, I recall the stock was in the green actually just an hour or so ago. That's dipped into the red. So I think we should get an intraday chart of that one. Yeah, it's suddenly seen a bit of a downtick. The other one that was in the green was Sun Pharma. That as well has moved into the green. It's just marginally in the green, but the intraday chart actually tells us the picture. And from the broader markets, the high beta index that I track closely is the metal index. It was badly under pressure earlier today, But I think in the last 60 minutes, there's some kind of recovery from the low point of the day on the metal index. Still down 1%, but I think it's recovered from being down close to around 1.5%. For the time being, we slip into a short break. Alpha Manager of the Day, Nitin Bhasin of Ambit, will join us on the other side.
Welcome back. Well, let's get you a big opinion on the market. Earlier in the day, we caught up with Sanjeev Prasad, Managing Director and co-head at Kotak Institutional Equities. Spoke to him about Nifty earnings, the monetary policy stimulus, and why he likes banking stocks. Take a look.
As of now, we are looking at about 12% growth in Nifty 50 index for FY 2026. But do keep in mind the fact that almost 2/3 of the earnings is coming from very specific sectors and factors, namely metal mining sector that contributes to almost slightly more than 20% of the incremental earnings of the Nifty 50 index, and that is largely linked to the fact of higher domestic profitability for the steel companies compared to FY 2025 when profitability was on the lower side. This is all linked to safeguard duty. It's got nothing to do with the performance of the economy. 100 basis point is what the RBI has delivered in this equity cycle, and that's it. 100 basis point rate cut doesn't change anything as far as the household EMIs, etc. is concerned, especially if you look at the low price, low tenure tickets. It doesn't really matter actually as far as EMIs are concerned. There's a clear slowdown as far as the government budget is concerned. You look at the central government numbers, it's looking at 7% growth overall. A lot of that is also coming from non-traditional capex items, which probably will not get spent.
Okay, Mr. Sanjeev Prasad there, sounding a little bit cautious, or quite cautious actually, on a lot of sectors, but he's positive on a couple of banking names and insurance names as well. They as well are reaching those levels where in fact will be fair value. Well, let's focus on the markets. A few stocks should come up for you. I think Aban Offshore, that's one of the few stocks actually from the broader markets that I'm seeing, at least in this hour, has bucked the trend and moved to the high point of the day. So not a stock we talk about very often, but Aban Offshore, if I look at it, yeah, that's seen a bit of a spike up in the last few minutes. What else? Restaurant Brands Asia, up 10% now. A massive up move is what we're seeing out there. So I think we should get that one as well up for you on the screen. And from the tech names, Wipro, I think, is doing a thing of its own. That stock as well has moved quite smartly. In fact, the one stock from the broader markets that's been doing well all through the day is Aeroflex Industries. Let's get the intraday chart. Now it's up 15% in a market that's quite dull actually. So makes sense to pull that one up. Surabhi?
Yeah, absolutely. I mean, look at that, 15%. Who would think it's a dull market? Big move coming in over there. Okay, let's talk about some more stocks that are in focus today. And Swiggy is one of them. And on a day like today, it's actually managing about a 2.5% kind of an up move as well. There is an IIFL note that has come out on the stock, and that broker seems to be bullish on Swiggy. Let's go across to Manglam to find out why. Manglam?
Well, so the reason why IIFL is bullish on Swiggy is because it's looking at Swiggy and it has a comparable, which is Zomato. And in both food delivery as well as quick commerce, they've, placed Swiggy where Zomato was, say, a few quarters ago, and they are looking at the future on Swiggy basis that itself. So they have a buy rating on the stock, target price of 535, and their recommendation is predicated on a couple of things. One, in the food delivery business, Swiggy is about 5 quarters away from Zomato when it comes to the overall gross merchandise value, and at the same time gross order value, that is, and the EBITDA is about 7 quarters behind. In the quick commerce, on the GOV, they are about 3 quarters behind Blinkit, but on the EBITDA front, they are about 8 quarters behind Blinkit as well. More importantly, if you just look at the valuation differential between the two, they are valuing Swiggy's food delivery business at $8.5 billion. And if you take that out from their current market cap, it implies that the quick commerce business is actually trading at a near 90% discount to Blinkit. And that is what they believe is a cause for asymmetric returns. Given how the industry is poised right now, they are expecting 28% growth compounding on the revenue over the next 3 years. At the same time, they believe that Swiggy will get EBITDA positive by FY27 and net profit positive by FY28. So all these factors working in favor of Swiggy. Yes, Zomato always at a premium to Swiggy in terms of valuation, but the current valuation for Swiggy implies a deep discount to Zomato, specifically on the quick commerce front. And if the execution is right, then maybe there is case for asymmetric returns. That's what IIFL believes.
Okay, so they're optimistic on Swiggy. Got it. Markets, clearly buying some, if not all of that logic. And the stock is holding up today on an otherwise weak day for mid-caps. Speaking of mid-caps, Nigel, just a quick update here. I mean, I was in conversation with Pankaj Tibrewal, someone we know as a very well-celebrated mid-cap stock picker in the country. And Pankaj is someone who's spent a good 14-15 years with Kotak Mutual Fund, building up the small-cap fund there, the mid-cap fund over there. So the topic of our conversation in Market Cafe was actually, how do you pick mid-cap stocks? And is there still value? Because, there's a narrative in the market that large caps are better, don't go to mid-caps. Can you guess one of his best multi-bagger picks? He spoke to me about one.
Okay, which one?
Solar Industries.
Oh, interesting.
And Pankaj went on to tell me that he picked Solar Industries way back around 2006-07 when the IPO was coming out. And he said from a market capitalization of 1,000 crores, he through his teams managed to ride it, till up till now, 1,50,000 crores.
Wow.
Yeah. So I wanted to understand, how do you find such multi-baggers? How do you pick them? Can we, as investors, learn something out of, looking at celebrated fund managers like this one? Here are the chunk. This is the latest episode of Market Cafe.
One of the companies which is now known in the market, is a company called Solar Industries, right? A very
It has gone
less known,
up and only up.
so a less known promoters in, say, for example, Nagpur. 2006 they came for IPO. If my memory serves me right,
2006?
2006.
Wow,
If my memory serves me correct, Surabhi, they raised about 80 plus crores. And after that, they just did a small dilution in 2013-14 of 100 crores. And every 3 years, their top line used to convert into bottom line, right? And very strong promoters. But over a period, they kept on reinvesting the cash flows back in the business for growth.
Okay.
And whenever you used to meet them, you used to get a sense of passion, integrity, and skin in the game. They still hold the promoter family 75% or 74.5%. And today, the market cap is 1,50,000 crore.
And now
when we identify, it was 1,000 crore market cap.
1,000 crores to 1,50,000
crores. And last 10 years, they have been investing in defense, for example, without a single revenue coming in. So over a period of time, what you understand is that one, the promoter quality has to be extremely good. Because businesses kabhi linear line mein nahi chalte hain. There will be periods when couple of years business doesn't do anything. And we have seen that in many companies. There is a slowdown, there is some external environment problem, challenges, internal challenges. And there, when you have a conviction on the business and the promoters, then you ride that slowdown along with them.
So tell me, and Solar, just for context, I mean, now we all know Solar is so big in explosives, in defense warheads. In fact, in Operation Sindoor, I think many of those warheads were used on the various missile systems that were at play. And the stock has gone on to achieve wonders as well. So on that point of staying the course, even through the rough patches, when a company is not showing growth, when it's going through a painful period where operating cash flows are not rising, or you know, maybe there's a delay, or some of the usual fundamental parameters are not getting met, or margins are getting squeezed, how do you decide to stay on versus checking out, saying that red flag nahi, or
so one thing which you don't compromise is any governance issue and any red flags on balance sheet and cash flow. I think वो जहाँ मैं देखता हूँ मैं भाग जाता हूँ, whichever the narrative or the business story will be. I think if those are intact, even in a slowdown, I think what you have to check is that, is the promoter more in pain than you? See, you are 25% shareholder in the company. Promoter is 50, 60, 70% shareholder. He's pained more by the slowdown than you are. And I have seen that leaders of the sectors, they work harder during that slowdown and emerge stronger after the cycle from a bottom. So I think you have to get that sense during the interaction, during the conference call of the quarters, that what are they doing to come out of that slowdown and the disruption which they are facing today. And if you get the right answers, you stay on the course, irrespective of what is happening in the market. And I think there are many companies which have seen such cycles and they came out much stronger after the cycle.
So what made you take that bet on Solar? Just to, you know, I think recap
I'm just giving you an example, but I believe that the fact that, you know, year after years, they kept on reinventing themselves. They started with a supplier to Coal India. They moved to private sector. They moved internationally because they were cost efficient. Became world number 2, 3, 4 over a period of time. Then they thought that their strength is chemistry, explosive. Why not enter into defense? Privatization was happening for defense. The 8, 9 years, they kept on only pumping money, no outcome. But see, when the outcome comes, जब देता है भगवान तो चप्पड़ फाड़ के देता है. So I'm just saying that this is not a recommendation. I'm just showing that if you can get
on the thought process, we just wanted to understand
that thought process and patience and staying on the course for a longer period of time gets rewarded. I mean, look at a promoter like Mr. Tapadia of Supreme Industries, 88 years old. The kind of passion he comes along with still today, and he's a leader in the PVC pipe sector today. And look at the way the company has grown over the last 20-25 years. Look at my own ex-employer, Mr. Uday Kotak. 2003-04 we got the banking license, the way the only private sector generation, and everything common is the leader. So get the leader right, get the balance sheet cash flows right, get and be patient with your temperament and your own thing, you will make money.
Okay, small nuggets there, a little bit of, drops of excellence. How do you go about trying to manage your portfolio? Can you look at, better stock selection, specifically when it comes to mid-caps? That whole conversation goes live on YouTube tomorrow. Market Cafe coming up soon. Okay, on that note, we take a very quick break. We'll come back on the other side. As always, all the buzz from dealing rooms coming up with Nimesh, and then some final trading calls coming up with Mitesh as well.
Welcome back. An absolute listless trading session actually for the headline index, as flat as can be as we speak. Aban Offshore, that's a stock that's now moved up close to around 6%. But Mitesh Thakkar is back with us. Mitesh, a couple of trading calls from you.
So I think, in a market like this, you'll have to, This is picking up nicely. I share Escorts. I've got Escorts as a BTST. Keep a stop just below levels of 32.50. Look for a 3300.
No, I'll tell you what, Mitesh, we'll come back to you to understand those calls, because the audio line is not very, very clear. But the line that's clear is the one with Nimesh. He's joining in on our special segment, D Street Chatter, to tell us what is he picking up. Well, Nimesh, headline index flat, broader markets in a lot of pain. Tell us more.
Well, that's right. It's the broader markets today which is giving a lot of pains. The mid-cap index is down 1.5%. And clearly, there are signs of some bit of selling pressure or capitulation, so to speak, in the broader market names today. I guess it's largely to do with the fact that there's so much of global noise about the geopolitical risk. So I think that's putting pressure on the broader market stocks today. And there's a lack of buying interest as well, is what I understand. Again, from a flow perspective, mixed day. Some blocks might have an impact on the actual number. But the only space which has done well today in terms of buying interest are the OMC stocks, the oil marketing companies. Not showing up in the stock price, but there is genuine buying, is what I understand, in the OMC stocks today. I guess, what I've been tracking closely, the trend of large block deals, QIPs, so that trend is likely to continue. And there is a long list of not only blocks and QIPs, but also the IPO pipeline is quite strong as well. So the fundraising or the supply, draining of supply is going to continue, is what I understand. Technically, 24,450 is a deep level. 24,800 is a crucial level to watch out for. But I guess today is more about pain in the broader markets, and that's largely because of lack of buying interest from large institutions.
Okay, got it. What about individual stocks, Nimesh?
So I'll start with the block first. So the first name is Bharti Airtel. Been consolidating of late, but again, there is a big indication of a large block coming soon in Bharti Airtel. Again, a strategic investor who owns a big stake could be a potential seller there. So that's the first name. The second stock is Sheela Foam. We saw a big rally in the last couple of days, largely because I understand one domestic wealth firm has been an active buyer in Sheela Foam, and that explains the recent outperformance in the broader market, within the broader market stocks. The third name is Previous Speciality. That stock has sharply recovered from the intraday lows after a large block. Again, I understand the promoter entity, one of the promoter entity was a seller, and a single domestic mutual fund was a buyer, and hence we've seen a very sharp recovery in that stock in today's market. And the last is a couple of mid-cap names where I'm guessing there could be large blocks coming very soon. JBM Auto, I understand there is a large block expected very soon. Similarly for Centum Electronics, the promoter entity could be a seller there, and also in Avalon Tech, there is an indication of a large block coming soon. So as I said, large cap, mid cap, small cap, the block pipeline seems to be quite strong.
That's an issue, right, Nimesh? Flows are solid, good, but the outflows are even more solid. The kind of paper supply that you're getting, that's south sentiment a little bit. Thanks a lot, Nimesh, for joining in. Well, let's go back to Mitesh. He's joining in to give us his couple of trading calls. Mitesh?
So I have Escorts as BTST, Nigel. I think, that's a stock which is doing well. The two-wheeler pack is looking good to me. So Escorts is a BTST with a stop below 3250 for targets of 3300 to begin with, and then we will look at higher levels. And one STVT call that's on IEX, keep a stop just around levels of 180.25 and a target of around 176 for tomorrow.
Okay, all right, got that. Thanks, Mitesh, very much for it. You have a good rest of the evening, and we'll connect again, of course, tomorrow with more. Let's look at railway stocks, because today in this broader market correction, railway stocks have actually cooled off a little bit. Quickly pull some of them up on the screen. Yep, RVNL, RailTel, still down 4 to 5%. They've come off from the top of the morning. Let's go across to Vinny, who's been looking at some data around railway stocks. Vinny, what is it throwing up?
Hi, Surbhi. Afternoon. It seems like they're losing some bit of its steam today, but not only today. If you look at the last 1 month return in terms of stocks as well, we are seeing a decline coming in. Before that, we had seen that up move coming in for the stocks. So before that, if you look at the returns, they're on the positive end. But last 1 month, today specifically, we're seeing a decline coming in. Valuations also. When you're looking at valuations versus peak valuations, yes, no doubt they've come off versus peak valuations. But historical average, if you look at that, historical average, the valuations are still quite high. Now, what are the points that actually come in for railway sector? In the recent times, couple of good news flows have come in, that order wins were continuing for some of these railway names. Robust government orders in terms of order flow, that is something that is there. Expectation that, public sector investments is something that will increase. These are two good points. But what are the negatives that we're keeping an eye out on now? One, obviously, valuations, like I highlighted, they're still quite high. They've come off, but still higher. FY26 railway budget, that has remained flat. So it seems like, investment on that front is lower. Metros, we're not seeing a significant pick up as much as one was expecting. So yes, that's a bit of a subduedness on that front. Medium-term outlook, analysts are highlighting a bit of a dim look coming in for the railway sector overall. And just in the last couple of years, or FY24 and FY25, if you compare that also, the revenues have largely remained flat. There's nothing much of a change or an up move that we've seen coming in on that front. So these are some of these downsides that we've seen coming in. And today also Sanjeev Prasad, when he spoke to us as well, he also said that valuations still don't look quite attractive. So that's maybe a bit of a concern that still comes in for railway companies.
Okay, all right. Thanks a lot for that, Vinny. Neat summary of all those railway stocks. But let's get in Amrish Baleka, who's joining in on the show. Hi, Amrish. Good afternoon. Good to see you, Ben. Any view on these railway stocks? Some of them ran too fast. There's a big runway ahead. But in the near term, did they get too expensive? Is there any stock you still believe there is value?
In fact, I find most of the railway stocks decently expensive. Yeah, if you're talking of the next 3-5 years, the bigger story still stays. But we should also see as to how much it has run up in the recent past, and that's what is making it a bit expensive at this point of time. So I think it's time to just stay on the sidelines for a while. When you're talking of railway and defense, and possibly wait for some correction to buy.
Okay, wait for some correction and then only buy. All right. But Amrish, what about that one stock you normally give us when you join in? Today, what's the stock on your radar?
That's ABB India, which is a technology leader in electrification and automation. And they have broadly 4 business segments: electrification, motion, process automation, and robotics. And if you look at the order flows, they've been excellent in the last quarter. And outstanding orders have increased about 11% Y-on-Y to close to about 9,958 crores. And sectors which contributed majorly to this order book was clearly railways, data centers, electronics, energy, then ethanol and hydrogen, tires, as well as water treatment. If you look at the margins, they've improved, and the management has guided that they would complete 65 to 70% of the outstanding order book in the current, financial year, which is actually the calendar year, January to December 25. And this, I think, is decently positive. So I'm expecting an EPS of about 149 for calendar year 27, and with that, my target price is about 7,450.
Okay, got that point. So ABB India in focus. Thanks for that, Amrish. We'll have more questions for you in just a bit. But let's also take stock of today's episode of the Global Reset. This is, of course, our new offering on CNBC-TV18 Prime. Today, Prashant caught up with Louis Organis, the global head of macro strategy at JP Morgan. Louis explains the reasons behind central banks' rising affinity for holding gold as reserves instead of currencies. Take a look.
So there is genuine fear from central banks that are holding all these FX reserves in developed market currencies that at some point all these currencies will be somehow debased because of the problematic, troublesome fiscal trends. So there's been a resort to accumulate more and more gold. Gold right now, it stands at around 20% of central bank reserves in the developed markets and around 9% in the emerging markets central banks. These 9% lose modest, but literally 10 years ago it was only 4%. And the EM central banks are the ones that have been actually accumulating gold quite a bit. That is why our team has a very bullish view on gold, because they see this as not stopping given geopolitical uncertainty and given the fiscal outlook that is quite complicated in many developed countries that are issuers of these reserve currencies. Just to mention, gold, if you look at if you track the prices, it took 12 years to go from $1,000 to $2,000 per troy ounce. It took only 4 years to go from 2 to 3,000, and it will take less than a year to go from 3 to 4,000. Our commodities research team expects gold to hit the 4,000 level, potentially in the first half of next year. So you can see that trend is accelerating. Certainly, there are many more buyers of gold. But to your question, EM, or generally speaking, central banks around the world are increasing the share of gold within their reserves.
Remember to tune into the all-new CNBC-TV18 Prime, bringing you insights from policymakers, business leaders, and economists shaping both the world and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC-TV18 Prime at 12 noon for the Global Reset, 1 p.m. for the Big C, and Global Lens at 8:30 p.m. Okay, all right. Well, we also caught up with JP Morgan's Jahangir Aziz and spoke to him about the way gold prices are shaping up and also where the dollar is positioned amidst ongoing tariff tensions, as well as what's happening with respect to West Asia geopolitics. Take a look.
Market is looking for is what happens next, right? In the sense that, does the conflict widen? Does the conflict actually disrupt oil supplies? And I think if that happens, I think the oil market moves. And I think at that point, dollar once again becomes a safe haven. Look, I think temporarily the money moves into dollars but mostly into gold. I think that's where the move is going to be based on what's happened over the last 3 months. But it's a 2-week, 3-week phenomenon. I do not really think there's going to be much of a chasing of dollar as a safe haven, simply because none of the basic fundamental variables get that badly affected if it's just a 2 or 3 week event. We do no longer have a recession in the baseline for 2025. However, we still think that the risks of recession are still elevated. And if you do get another disruptive tariff uncertainty related reaction in the market and in the economy, then those recession risks are back. Even now, tariffs to me are probably a bigger risk, and how tariffs evolve post the court decision to us is still a bigger risk than a flaring up of geopolitics. There's obviously a risk in the near term, but I think if you think about it in the next 6 to 9 months' term, I think that's still a bigger risk. U.S. fiscal policy is also a bigger risk.
The Money Control Mutual Fund Summit is back in 2025 with its 4th edition, spotlighting the $1 trillion dream. A bold vision to reach $1 trillion in assets under management AUM by 2030. Join top policy makers, fund managers and market leaders as they deliver actionable insights and chart the future of investing in India. Money Control Mutual Fund Summit 2025, 23rd June, Mumbai. Register now by scanning the QR code.
Welcome back. Interesting updates at the bottom of the screen. So the HDB Financial IPO which is the next marquee one because it's coming from such a marquee group. That's going to open out on the 25th of June. Interesting time there. Let me actually toss this to Amrish. Amrish, I don't know if you've had a chance to already start looking at the contours of this entity from HDFC Bank.
Right.
But, you know, largely speaking, the market wisdom is that financials still offer some opportunities, some safety, maybe some valuation comfort as well. Absolutely. How are you looking at overall NBFCs? And maybe a view on this offering that will soon hit the market?
I think HDB is, I think, one of the most awaited sort of IPOs, and especially from a house like that.
Yeah.
So clearly, I don't think there's any question as to how the demand would be and how many times it'll get oversubscribed, although it's a large issue. So clearly, I mean, one has to apply for it. I mean, without really knowing as to what the valuations would be at the time of the IPO. But still, I assume that they would be leaving enough on the table for the investors. But NBFC overall, yes, I mean, to a certain extent positive, but at the same time cautiously positive, because I still see that pain at the bottom of the pyramid. I mean, we've seen the issues as far as the microfinance is concerned. Now, I think the issue would be there at the retail end of the loans. So I think that's something to be watched out for. So I'm cautiously positive on this.
Okay. All right. Got that. Amrish, I don't know whether you've looked at some news reports with regard to Dreamfolks. Not sure whether you had a chance to look at it with regards to some cancellations of their some contracts that they had.
Absolutely.
Any view on the counter? The last time I checked, it was down close to 10%, but I believe the management is putting out some clarification with regard to that report. We'll try to get that up for you on the screen. Any view on the stock?
I think we should wait for the clarifications, because the sort of news which is coming out or floating around in the market is about ICICI credit cards, Axis credit cards moving out of Dreamfolks along with the MasterCard. So, I mean, ICICI, if I'm not wrong, is the third largest. Axis, after taking over Citi, also is one of the major players. So with two big ones, along with MasterCard moving out, is surely very negative for Dreamfolks. And the sort of reasons being given is about that 1 day's outage. But I don't think it can be only that 1 day's outage. There could be some other issue which we are still not aware of. So I think we should wait for the sort of clarification from the management.
Okay, all right. I think we're getting some clarification. The management is clarifying that these reports may not be very, very accurate, but we'll wait by on that front as well with regard to Dreamfolks' clarification coming out. Well, Amrish, I wanted to ask you about the cement pack. I think there's, I think we have got that clarification, should be up for you on the screen in just a bit with regard to Dreamfolks. That's some source-based information, but we'll see whether or not, that holds ground. Amrish, let's talk about the cement pack. That actually was looking quite good. But the early onset with regard to monsoons and some kind of softness with regard to demand, that proved to be a bit of a dampener. What's your view on the cement pack? I think you were positive on a couple of names.
Certainly. In fact, monsoon is there every year. So, I mean, clearly, during this time, the demand goes down, which is all known. So I don't think this should really be the reason for cement stocks to go down. But in fact, if you see the last couple of years, because of sort of infra projects which have taken off, the sort of real estate activity which you're seeing, there was clearly, the demand had moved up as far as cement is concerned. But at the same time, we had seen that the margins are not really moving up. Now, going ahead over the next few quarters, I clearly see the margins also moving up along with the demand. And in fact, the new capacities, I think, will take some more time. So there could be some amount of, demand supply sort of a mismatch, which will actually increase the margins for most of these companies. So I would clearly look to buy Ultratech even at the current levels.
Ultratech. All right. Tata Consumer, that's one of the biggest gainers. Wait just a minute. I think we have that clarification from Dreamfolks. They're saying there has been no cancellations in partnerships. This is, Dreamfolks, I think, sources telling us here at CNBC-TV18. So that's the clarification, and they're denying the recent reports. So we'll get some of those lines up for you on the screen. For the time being, the stock took a sharp knock, and it's bounced a little bit, but we'll have to see whether or not, that holds ground. Hopefully, we invite the management actually on the show, and in fact, they can put out whatever clarifications they choose on that front. Well, let's talk about the biggest gainer on the Nifty, though, Tata Consumer. That one, in fact, is doing quite well. That's up close to 2%. What's the view on this name? It's holding strong in an otherwise wobbly market.
No, in fact, I'm decently positive on Tata Consumer. In fact, we have a price target of about 12.25 for this stock. So I think even the current levels could be bought.
Okay. All right. Got that. And Eicher Motors from the two-wheeler pack, that one actually is reasonably protected from this entire push towards EVs. And also it's got, a niche of its own. However, the stock is not very, very cheap. Your view on the stock?
No, in fact, instead of Eicher Motors, I would surely prefer to buy something like a Hero MotoCorp, which has corrected decently well if you see the last couple of months. And I suppose the version 2 of VIDA, which will be launched quite soon, I think that could be a game changer for Hero MotoCorp as far as the EV two-wheelers are concerned. I think that should increase their total market share in the EVs. So I think at the current levels, the downside seems limited, whereas I think you can have a decent upside of about either 15 to 18%.
Got it. Okay, all right, Amrish, we thank you for joining in, but stay on with us. For the time being, let's do a quick wrap of today's trading action. Well, it was a down day, no two ways about it, and the expiry-related factor did play out towards the end, and that's why the Nifty ended closer to around the low point of the day after being flattish for majority of the trading session. So Nifty goes home with a cut of close to around 60 points. However, on a closing basis, there'll be an average of the last 30 minutes or so. So that's where we could end actually closer to around the 24,800 mark. That's what the average close will be. Stocks that didn't do well today. You had Adani Ports, Bajaj Finance, Shriram Finance, all of them for the top losers in today's trading session. Big downtick is what we saw at them. And a couple of these tech names as well, like Tech Mahindra went home with a cut of close to around 2%. On the flip side, Tata Consumer, one of the top gainers, up close to around 2% in trade today. Eicher Motors as well did pretty well. And Mahindra was another stock that was up 1.5%. From the IT pack, well, you had Wipro that was actually an outlier that went home with gains of close to around 1.5%. Let's focus on the broader markets then, and a few stocks that were in focus in today's trading session. Aeroflex Industries stock up close to around 10%. However, it did come off the high point of the day as well. So you should keep that in mind. But big up move is what we saw on that particular name. There were some reports that indicated some disruption with regard to business on Dreamfolks. So that stock, in fact, was down close to around 10%. And one point of time, it was down close to around 15% as well. So Dreamfolks, did go home with a cut of close to around 9%. The management clarifies that none of those reports are true, but the street clearly was, rattled by that newspaper, that news report that we saw earlier today. So the big pain today was in the broader markets. The headline index goes home with a cut of around 50 points or thereabouts. But the broader markets tell you the story with regard to the nervousness that we saw in today's trading session. Well, on that note, though, we'll wrap up on this edition of Closing Bell. You don't go anywhere. Markets Forward comes up next.